6 nifty companies will come out with numbers today. And let's start with the big one, and that is Reliance Industries. Somit joins me. Somit, the headline numbers first. Let's start with that.
So Reliance Industries on a standalone basis compared to last quarter, if you see, the revenues are expected to be 11% higher to around 76,000 crore rupees. EBITDA would be marginally down to around 12,876 crore rupees, and margins will also contract to around 16.9%. Net profit, however, is expected to be marginally higher by 1% to 8,345 crore rupees. Now, this is the 7th consecutive quarter where the net profit of Reliance Industries is expected to increase. Now, the key number, that is gross refining margin, is expected to come off a bit to around $11.5 per barrel versus $12 per barrel reported in the last quarter. Now, the fall is because the Singapore GRM, that is the Asian benchmark, also came off a bit in this quarter. It came down to around $7.2 per barrel versus $8.3 per barrel. So if you see on a net-on-net basis, the premium to Singapore GRM is actually bouncing back to around $4.3 per barrel versus $3.7 per barrel in the last quarter.
Okay, so we'll talk about Jio in a while. The other businesses, what is expected to outperform, what is expected to underperform?
So, an outperform side, it will be the petchem business, which is expected to outperform and offset the subdued performance of the refining segment of the company. Now, petchem outperformance is expected because of the volume expansion and because of ethane imports. Now, volume expansion is expected because this will be the first quarter where the full benefits of the paraxylene plant will be coming in. And on the downside, there will be obviously NP will be a drag, and retail could also be a drag for this quarter.
Okay, and finally, Reliance Jio, what is expected there?
So Reliance Jio is expected to come out with a net profit. Now, this net profit is because of the 57% cut in the interconnect usage charges. Now, if you see in the last quarter, that is the second quarter where they came out with the numbers first, Reliance Jio paid interconnect usage charges of more than 2,100 crore rupees. So if you assume everything else remains the same, a 57% cost saving would definitely result into a net profit for Reliance Jio in this quarter.
So these are the important factors that you have to watch out for. The entire telecom pack probably will react to Jio numbers that come out. And a profit is expected in Reliance Jio this time around. And we can't leave behind the bank. So Kotak Mahindra Bank and HDFC Bank will come out with numbers today. Shraddha joins us. Big moment for Kotak yesterday. For HDFC hit the 5 lakh crore mark. But numbers today, which one you want to start with? I'll leave it to you.
HDFC Bank.
Okay, let's start with HDFC Bank.
Usually you don't expect any surprises from HDFC Bank. So that steady earnings growth momentum is expected to continue this quarter as well. Now, in terms of the key numbers, net interest income is seen growing by 21%. Net profit is expected to come in 22% higher at about 4,718 crores. Net interest margins expected to remain steady around that 4.3% levels. Even in terms of some of the other parameters, loan growth expected to continue at 20+%. That's the kind of trend that we have seen for HDFC Bank over the years, except for that temporary blip post demonetization. As far as the other income growth is concerned, that could moderate on account of lower trading gains, while fee income should continue to remain healthy. Asset quality again expected to remain stable with a gross NP number at about 1.3%.
Okay, what about Kotak Bank? What are the numbers and what are the important factors that someone needs to watch out for?
But for Kotak, again, the recent trends that we have seen should or are expected to continue. As far as the net interest income is concerned, that's seen growing by about 18%. Net profit seen higher by about 24% at 1,090 crores. Again, traction as far as the net interest margin is concerned. Loan growth again 20-21% sort of a growth should continue, and asset quality again should be steady with the gross NPA number at 2.5%. Remember, they have very low exposure to NCLT accounts, so that shouldn't be a concern. And lastly, we will be watching out for the performance on CASA and fee income traction, performance of non-banking subsidiaries, and of course the strategy with respect to the insurance business.
Okay, so that's something that we need to watch out from the banking space. Both HDFC Bank and Kotak will report numbers today. The big one from the FMCG space will be ITC. What are we expecting? The top line growth will be strong. We are expecting sales in excess of 10,000 crores this time around. The EBITDA too will increase, but the EBITDA margins will come down on a percentage basis because the revenue growth is much higher than the EBITDA growth, and profit is expected to come down this time around. It's expected, in fact, to grow by almost 7% this time around. Now, the important factors, let's break it down into businesses. First, let's talk about the cigarette businesses where volumes are expected to be subdued. So we are expecting anywhere between a -3% 0.5% to a 1% growth that would come in as far as cigarette volumes are concerned. They don't give the numbers as an individual cigarette business, but the additional cess that came out on cigarettes is something that may cause a decline in volume. No doubt the price increase has been taken to offset this, and that is something that will impact the volumes of the company. The other factor that you have to watch out will be the FMCG business. You saw a strong number that came in from HUL this time around. Even here, we are seeing more than 10 to 15% growth in the FMCG business. Sunfeast is expected to do well. Ashirwad is expected to do well. And most importantly, this comes in from a low base of demonetization. So this business is expected to do well. And the third business that they have is the paper business, the hotel business, and the agri business. So we'll consolidate that. That is expected to show very strong growth on the back of a low base of demonetization. Double-digit growth is expected as far as these segments are concerned. So that's what we want to expect from ITC. Couple of important factors that you want to watch out for. Raw material costs have gone up. So how will that impact? And cigarette volumes, how is the additional cess going to impact? And that is the important commentary that we need to understand how this will play out for ITC. But another important number today will be HCL Tech, and Agam is waiting by in Delhi ahead of the numbers. Agam, what can we expect from HCL Tech this time around?
Well, we're expecting a quiet quarter from HCL Technologies, starting off with dollar revenues, which are expected to grow by as much as 2%. A little over that on a sequential basis, and moving on to the margins, expected to remain largely flat at around 19.6%. Profits could see a dip of 1.8% on a quarter-to-quarter basis. We are also expecting the company to maintain its guidance for FY18 in terms of revenues at around 10.5–12.5% on a constant currency basis, with margins guidance standing at around 19.5 to 20.5. We will be watching out for what the management has to say with respect to the dollar movements and how it can impact margins going forward. And that said, we're expecting IMS segment to remain sluggish, but we will be watching out for IP deals and the related services around them and what that has done for the company. We're also keeping an eye on the organic growth for the company and also what its newest acquisitions have brought in for the third quarter. But on the whole, we're expecting a quiet quarter from HCL Technologies.
Bharti Airtel reported a weak set of numbers, but operationally they still managed to hold on because of the cost-saving initiatives that the company had taken. Now, the numbers were below analyst estimates. Revenue fell by around 7% to 20,319 crore rupees, while EBITDA was down by around 6% to 7,469 crore rupees. Now, this EBITDA number of 7,400 crore is the lowest in the last 15 quarters. EBITDA margin, however, expanded marginally to 36.8% in this quarter, while net profit was down by around 11% to 306 crore rupees. The average revenue per user, that is the key number for a telecom service provider, came in 15% below at 123 rupees. Now, this is the lowest ever ARPU reported by the company, and it has declined for the 6th straight consecutive quarter and is also below the analyst estimates of around 129 rupees. Now, this is the 6th straight quarter where the company has seen a drop in its revenue and net profit, and this is because of the 57% cut in the interconnect usage charges, ARPU downgrading, and because of the competitive intensity that Reliance Jio brought in this quarter also. Well, on the positive side, Airtel's African business has started to pay off and are covering up for the business losses that the company has been making in the Indian side. You can clearly see the EBITDA margins of the African business has been rising, while that of the Indian mobile business are falling. India mobile margins have fallen to 32.6% from 40%, while Africa margins have increased to 35.5%, the highest ever margin reported by the company from the lows of around 22.1%. Also, because of higher capital expenditure and sustained competition in the market, the company's leverage ratio, that is the net debt to EBITDA, has gone to its all-time high of around 3.1 times. Lastly, a key theme, that is data consumption, which is not a financial parameter but an important one given the current scenario. In this quarter, data consumption per customer per month increased to 5.3 GB. Well, this is not a big jump like we saw in the previous quarters, but it is still very below what the customer of Reliance Jio is using. Now, Reliance Jio per customer data consumption is around 9.6 GB.